Hello everyone and a very warm welcome to today's cryptocurrencies update for Saturday, March the 8th. Today we are going to talk about the US government crypto stockpile that has been signed into a executive order, and of course we are going to look at the charts. So let's have a look at the events of the past week and have a look at the charts. We're going to start here with US President Donald Trump signing the executive order officially creating a Bitcoin strategic reserve, which is actually more of a stockpile because the US government will not buy any new Bitcoin. That has, of course, been met with some trepidation, and I thought this tweet here or post on X was fantastic. We were watching the crypto market when it was signed, and this is what people think of it, because Bitcoin really didn't respond too well to the news that no buying by the government will be done. Personally, I think it is a good idea because then there is no real relationship with Bitcoin and the US government. Instead, they'll just have all the cryptos they have seized and forfeited from criminals and organizations and keep those in a stockpile. So it's really more of a stockpile than a strategic reserve. Besides Bitcoin, it will also contain Ethereum, I believe Cardano, Solano, and XRP. But again, the government will not purchase more. So that then caused, of course, Bitcoin to respond not too well to it. All right. Anticipations were great, but so far the reaction has been hum. Another interesting tidbit of information was posted 3 days ago, and that is that Binance open interest drops below 100,000 Bitcoin. It's the lowest level in over a year. So here you can see the yearly chart of futures open interest in orange, and in black, the price of Bitcoin. And you can see that open interest lows and open interest highs correspond very well with respective lows and highs in Bitcoin's price. So this really starts to suggest we're moving towards a very important low. Now, I don't have more data available. I might have to look it up here at Glassnode, but it starts to suggest we're getting very close to an important low. This might take a little bit. If you remember the previous update where we looked at liquidity and Bitcoin price over the last year, that they were very well related. Liquidity being the M2 money supply. It's pretty much all cash available in society, or all money, cash, savings, bank deposits, checking accounts, you name it. That really correlates well with a 76-day delay with crypto price, if you remember that. I'm not going to pull it up, but it showed that March will still be a little bit of a tough month, and then April, May will be fantastic. And that, again, supports our wave count. Now I'm going to start off with the most bearish wave count there is, because so far Bitcoin has not responded very well to the strategic reserve news or stockpile news, and that is that we can easily go to as low as 63,000. If that is the case, then we are going to adapt the alternative wave count that we've put in a larger third wave top. Okay, so here are the warning levels for the bulls. As you can see, 92,870, 95,129, 99,458, and of course the recent all-time high at 109 something. Okay, so if we break back above 99,500, it really starts to suggest the low is in place. With, of course, a serious warning above the spike high here on the news that the reserve would be coming online real quick. And then, of course, it dropped because there was real special details supplied by the government, as usual. So if we go back above this week's high, which was on Thursday, then that's the first indication. Then back above last week's high at about 95,000 is the second indication, and above 99,500 will be a third strong indication. The low is in place, without, of course, going below this week's low and last week's low. Okay, but once again, open interest is insanely low, which matches once again with the money flow correlation, suggesting a very strong rally pretty soon. A couple of days, 2 weeks is nothing unusual within Bitcoin's machinations of staying sideways for most of the time. So why can this then be a larger third wave? Because we could be in this larger fourth wave. It all depends, of course, on how you label exactly each and every annual high and low. Here I've labeled the 2021 high as a cycle 3 and the 2022 low as a cycle 4. I could label it as a major 3 and a major 4, right? Potato, potato, it just depends how do you want to label it. That then means that the recent high was a third wave of the primary degree, okay? As you see here in blue. Similarly, no real change, because then of course the recent low here was the 4, okay, and that's here, and now we're in this 5 completion. And that suggests that we might have just completed an A wave and a B wave, and now we're in the C wave, which can go to about 65,000. Okay, 65,000 matches quite well here with a CSA extension. If all hell breaks loose, it's possible. Remember, this is in a pretty decent bearish setup with price below the 50-day, the 10-day, the 20-day, and the Ichimoku cloud. The only thing that's holding the bullish long-term uptrend intact is the 200-day moving average, where we have bounced off several times. If it doesn't hold, we can easily go to this support level at about 75 to 65,000. It has happened before. If we look here at the mid-bull fourth wave correction from the previous bull cycle, so this is the mid-bull phase, and then you get the final rally. Then we had a 55% correction, and then it rallied about 140, 150%. So if we extrapolate that, going to about 65,000 is a 40% correction. Nothing unusual for Bitcoin. It's happened before, and I'll show you that with some other subsequent charts, and I'm sure you're familiar with it by now, where fourth waves tend to retrace 50 to 61.8% of the prior third wave. So we can drop that low into this support zone, and then we rally to ideally the 166,000. Okay, that would be about a 300% rally. Why? This is work from CryptoCon. You have seen this before. This is posted on X. It is not proprietary information. It's all publicly available. I'm simply trying to condense all this information into one simple package, one simple webcast for you, so you don't have to do all the research yourself. It is all nice and easily available. And of course, we're doing the weight of the evidence, right? We're combining all these little pieces of information together to see, is the bull over, yes or no? We don't believe so. Why? Because Bitcoin has a 3-year bull and a 1-year bear market. It's done so 3 times before, so we must assume it's going to do now the same. Also, during this bull, it has tagged every single time these extensions, and the next one seems to be the 166,000, which also on a bigger picture, I'll show you that in a moment, matches quite well with what that upside target should be. So here we have then the bullish resolution. We've done a already pretty deep wave 4, and we're in the starting gauge of the wave 5. I know I wish I could give you solid confidence that no, it's not going to be to 65,000, and yes, it's going to be 266,000 from here. But of course, over the last 2 weeks, if not almost month, this has been quite a horrendous price action, right? Since the low was struck here 2 weeks ago, this is not very conducive to high certainty analysis. So far, we've bottomed and topped kind of where we had to for this gray wave A1 and B2, and that's pretty much all there is to it. So we still have to have these warning levels for the bulls on the chart, and anything that goes below 65,000 means this entire wave count is wrong, and then we simply adapt this wave count. Okay, and again, this blue 3 doesn't have to blue 3, it can also be a red 3, which I will show you in a moment. It all depends on how do you label these bigger picture rallies and drops. Do you label them as cycles, primaries, majors? There is no real hard rule for that. Okay, I could also label them as minor waves. It all doesn't matter as long as you label the third wave as a third wave and the fourth wave as a fourth wave. That's what matters. So this is then the weekly chart, and as you can see, we're not going to close above this uptrend line. Now, it's not like a can-all, do-all line. It would be really nice to hold it because we kind of done a false breakout at this stage, but that's about it. And again, I wanted to point out here in August, we did about a 50% correction of the rally that started about a year ago from August 2024. So it started in August 2023, as you can see, and then all the way here to August to the summer of 24, and then down. Okay, so 50%. Same as this larger, what I showed you here, this correction 2021. In 2021 was a 50 to 61.8% retrace. We've done so far the same. Okay, if we assume the wave 2 is in here, that is about September last year, and then 3, we've done the same arrow. It's been enough, so that's why we can apply a 1, 2, 1, 2 setup in the daily chart. So 1, 2, 1, 2, something like that. But I have to see breakouts. I see no breakouts yet. I have to see a higher high, higher low sequence. And so far we're not seeing it. All we're seeing so far are lower highs and lower lows. We need to see. The only lower high we've had so far is, of course, this week's low. But now I also want to see a breakout above this week's high, because then we have a low in place, a high, a higher low, and then a higher low, and that is the start of a bullish sequence, because that's a 1, 2, 1, 2, 1, 2 setup. Okay, so that's really what we want to see. So we want to see. That might be a little too thick, but you get the idea. We want to see that this type of sequence, right? That's bullish. Similarly to what we've seen already in the past. All right, so your low is in place, this. You see this? This is a bullish sequence. And then, of course, you get your breakout. Okay? And that's what we want to see here. And if I don't see it, then it's simply not there. And then we have to switch, of course, to the lower lows and lower highs sequence. Okay? That is then what we're seeing. And that's the difference between a bull and a bear. And for now, the bears are in charge, because where we are in relationship to the moving averages, in relationship to the Ichimoku cloud, and the only thing that's holding this bull market so far up is the 200-day moving average. And again, we can easily get a 50% correction. And if we get a 40% correction, we'll just retest previous support, and then we'll rally to ideally 166,000. Because then, my dear friends, we've done as a 3 larger waves up, 4th larger wave, and then the 5th one. That will be 166,000. Okay? So that's the defining line in the sand. And so far, the crypto market or Bitcoin market is not giving me a warm, fuzzy feeling until we finally start to see these sequences of higher highs and higher lows. All right? Higher highs, higher lows. That's the sequence. We're not seeing it yet, except for one. We just have only this one here. That's a higher low. But we also got it here, for example, right? This was the low here, and it didn't materialize because we did not get a higher high. Okay, this was the high here, and what did we get? A lower high, lower high. That's not what we want. We want higher highs, higher lows. Can't stress it often enough. So otherwise, yes, we can ratchet down much more. As I showed you, of course, in this chart here, we can go to 65,000, matches with a CSA relationship. I don't know, all hell will break loose for whatever reason, but it is possible. I'm potential that I'm seeing in the chart. And this is a serious potential because the chart's not bullish yet. If we then move to our cycle of Bitcoin chart, and as you know, again, we are in the mature bull. And again, you have these 50 to 40% corrections, like we saw here in 2017, like we saw here in 2021, like you saw here in 2013. So we can easily go to that 65,000. That's a 50% retrace. You see it here, 67,000, even 57,000, but that's extreme. And that will pretty much bring us back to the highs of last year. So we're kind of going to retest the highs of last year. It's quite normal for that to happen in a bull run. And then we get the wave 5 to that 164,000, 166,000. Okay, so this matches as well. Also here again, so we've labeled it as a red 3. It all depends on how do you label these 2022 lows, 2021 highs. Again, right, it's a 3 and a 4. And it's the same here. It's a 3 and a 4. It just depends on how you label it. Yes, we can have just consistency, but the idea is the same. That's all I want to point out, which is also important to recognize that even though a wave label might be a different degree, as long as it's a 3rd and a 4th wave, that's all that matters. So far, Bitcoin has done about a 30% correction. So it starts to get in line with the previous fourth waves, right? 50%, 40%, and I believe this one was about 50, 60%. But so we can still do a little bit more to that about 65,000, and then we rally for about a 300% rally. That would be fantastic. All right. Again, we still don't think the bull is over, not until the end of this year. There's plenty of time left for that last fifth wave. A couple of months will certainly do it. If we start rallying in April, then we have April, May, June, July, August, September, October, November. 8 months to go. I like it. Onto Ethereum, readjusted the count a little bit here. So then we have the wave 3 low here. Again, this is quite difficult to reconcile with this 1-day rally and then this. So this starts to look more like a 1, 2, 3, 4, 5. Okay. And then we just have completed wave 3, potentially a little bit lower. It's okay. We'll get the bounce and then a wave 5. Okay. So the warning levels for the bears are on the chart in case our interpretation of this quite difficult price action is wrong. And that is, of course, the wave 4 high here at about, I believe, 25.50. The second warning is here at about 28.50. The third warning all the way at 34.50. And the final warning is, of course, all the way at the all-time high at 4,100. Okay. Is it an all-time high? I'm not even sure if that's actually the case. Let's go all the way back. Yeah, it's about there-ish. So you can see this very complex correction we've gone through. An A, a B, and a C, or WXY, and then WXY. And now the final correction, a C wave, should be underway, which is always 5 waves. 9 out of 10 times, I would say it's 5 waves. So we're just diligently waiting for the correction to complete. This downturn needs to complete, but you can see here, right? This is a bearish chart. Price is below the 200-day, below the 50, below the 20, below the Ichimoku cloud. That's why we need to break above all these price levels to tell us the low is in place. Otherwise, we can continue to sub the fight. However, I do like this wave count. A 1-day fourth wave, fine with me. Okay, and then like this. Ultimately, bigger picture-wise, you can see here the fourth wave low that we're anticipating. And it is still looks best as a triangle. We can also just label it as an A, a B, and a C. It's fine with me. This is a little bit more complex, but still we are looking still for lower prices. And yes, we can go all the way down here to about 1,800, 1,700 for this wave 5. Okay. Not if we start going back above 3,000. That would be a very good sign that the low is already in place. So I think we're starting to get closer and closer to an important low. But I don't have yet the exact good signs that that's in place, because once again, like Bitcoin, we've not seen a higher high, higher low sequence like this. Even this is, of course, a bullish sequence. You can even start it to go all the way here like this. Okay. So this is what we want to see. It might take time, but I'm not seeing it yet. So far, it's still making lower highs. It's making lower lows. Now it needs to make higher highs, higher lows. That's the difference between a bull and a bear. Until then, the bears are in charge. Binance Coin can still do this horrible expanded ending diagonal. 1, 2, 3, 4, and then a massive fifth wave. Well into the thousands, okay? Probably like 1,500, potentially. It is possible, but you know, I'm not giving the bulls much wiggle room here. I really need to start breaking, of course, back above at least 740, and ideally, of course, above this high to confirm that's the case, because otherwise, the low of the high is already in, and we're on our way for a pretty bad bear market. I can count enough scribbles to consider the rally since 2003 complete. Okay, so don't get your hopes up yet that this is going to materialize. I'm just trying to find a potential here, and it is still possible. I don't really like expanding ending diagonals. I've seen my fair share in the stock market and crypto markets recently, which does indeed suggest that we are racing towards a more and more important top, because these are exhaustion signals. And that's really all there is to it. I have zero signs this is the case, just merely pointing out the potential, zero indications. Again, we need to see higher highs and higher lows, and not lower highs and lower lows as we're currently seeing for most cryptos. Why? Because look at Solana. Solana should have topped. We were looking for about 300, and I think we got to about 295. Close enough. I think this one has topped, and that's why we should be careful with Binance Coin as well. It could have topped with just one last but possible push higher, but really please don't count on it. Okay, that's really my message. Bitcoin, I'm still bullish on it. We just need to see how this is going to fill itself in over the next few days. Oh yes, it can rally all the way down to 65,000 through March based on that poor liquidity that we saw in the previous update. And then liquidity is going to come back and rally price pretty high. And as we know, Bitcoin can rally in 2 months from 65,000 to 160,000. It really can. If you look here at November and December, this is just, as you can see here, in 1.5 months, Bitcoin rallied from 66,000 to 109,000. So in 1.5 months, it can rally that much. So easily, if we are then April, May, June, July, August, September, October, November, in 8 months, it can easily rally to 166,000. All right. Again, we still think much higher prices are there. Open interest is pretty bearish, which is a contrarian signal. Stockpile in the US will not do anything for Bitcoin, so that's great news as well. We can discard it. We don't have to look at the government buying and big visible hands moving the markets. That's out of the question. That's really good news, actually. And we still have our eye on the price of about 166,000. Matches so well with our final upside target, but we still cannot exclude a deeper push lower for a more extended, protracted fourth wave before the final fifth wave comes for Bitcoin. Similarly for Ethereum, we don't have signs yet that the bottom is in place. We need to see higher highs, higher lows, at least back above last week's high. That's all we have for this week. We hope you appreciate this webcast. If you have any questions, please let us know. We'll catch you all next week.